17 the time to talk winners and losers on Wall Street with financial expert Rob Black, who's joining us now to help us see what we're seeing on the markets. Rob, I was looking at it. First they were down, now the Dow's back up again. What's driving the movements today?
Not much.
Okay.
Maybe a little indigestion. Markets are sloppy. GM came out today and said earnings look better than expected for the first half of the year, which is very positive. It means we're spending money. Meme stocks are in control today. I was just listening to CNBC before we went on, and they're fighting over, have meme stocks taken over the stock market? More on that in a couple minutes, but AMC's down, BlackBerry's up, Bed Bath & Beyond are down. It's companies that are shorted that fundamentally don't make a lot of sense. We saw that there was 1 million new hires in the economy, James, and to me that means in about 2 weeks, there's gonna be 1 million new paychecks and people spend it. So Wall Street's doing what it's supposed to do. It's moving higher based on the economy looking better and better over the next 6 months. Of note, Anheuser-Busch is going to give away a free beer if 70% of Americans get vaccinated by July 4th. You have to go to a special website. They're going to give you a debit electronic email, which is fascinating. So they're basically paying for advertising, $5 per person. I don't think it has anything to do with COVID-19. I think that's a positive out of it.
Yeah.
But it's another way of advertisers trying to figure out how to, get people to buy product.
That's interesting. All right, very cool. And then I see too, Twitter launching a new paid subscription service. I don't quite understand because, I don't know, we all use Twitter right now for free. Is there something new they're adding on that they're going to ask people to pay for?
Well, I think you have a great question. Will it be sticky or not? Will we use it or not? Will we pay or not? Because it's free. But Wall Street loves subscriptions. We loved AOL as investors. We love Netflix as investors. We love subscriptions. A lot of the video game companies have subscription models. You get the point. You get the idea.
Yeah.
So Twitter Blue, it's a subscription service. It's going to be $3.49. They're tested in Canada and Australia right now. For Wall Street, it means diversification of revenue, which is great. For you and me, it may mean undoing a tweet for the first 30 seconds before it goes out, which is pretty good because I've sent some pretty dumb tweets out of my life, especially if I got a little beer in me. You can bookmark folders. You can read tweets pages easier. You get free customer support. And honestly, if we get people to pay for it on occasion, maybe they won't be such jerks and, go after people in a mean way on Twitter.
Interesting. Okay. And then you mentioned meme stocks earlier, so let's circle back around to that. Yeah. I know that seems to be driving a lot of retail investors, but folks may not be fully clear on what we're talking about when we say meme stocks. So kind of walk us through that.
I so don't want to do this segment because I'm not a millennial. Yeah. I'm a Generation Xer. It's valuing stocks with hype over logic. Meme stock became a thing in 2020 when GameStop, a company that should go out of business because Xbox and PlayStation don't require you to have a DVD to play it anymore. You can just download it. But gamers said, nope. People got on Reddit, people got on Twitter, people got on a website called StockTwits, and they just started buying. Logically, it makes no sense, but the hype helped push it higher. It was heavily shorted, and it creates a short squeeze. It's tied towards social media. It's tied towards volatility. Millennials love it, probably more than they do avocado toast. It's a fun way to pass the time. They're not using big money. It's free on Robinhood. But what you need to do is take a look at Canopy Growth and Tilroy from a couple of years ago. They were marijuana stocks. They would have been meme stocks, but it wasn't invented yet, that idea. Yeah. And they shot straight up like a skyscraper and came all the way back down. Yikes. So is it for me? No, but I'm not a millennial. If I had a millennial kid, it would be for them, and that's okay. It's training wheels for younger investors to have a little bit of fun and see that you can make money in investing. Yeah,
I guess those early to the party, though, can ride it all the way up, but those late to the party are the ones that ride it all the way down, unfortunately. Yeah, it's funny. Had this been around when Blockbuster was going down, that could have very well been something that people rallied behind.
You can take my job. Please, take my job. Take my wife. Give me the free beer.
Very funny. All right, Rob, thank you. As always, we're going to chat with Rob again next week. So send your questions, send your comments, send your topics in. Give him an idea what you'd like to talk about. You can find him on Facebook and Twitter. Email him directly. And, of course, you can always connect with him on our website at KRON4.com and check out his past segments. We'll be right back.